I just want to share with you a little bit about what I've been experiencing in the real estate market these last couple of weeks. And a hot button topic is affordable housing. There are really some opportunities with affordable housing, but the one thing we never really get is a definition of what does affordable housing mean, because it seems subjective to me. Affordable housing to me might be different than affordable housing to you. So just in dealing with consumers out in the public and in dealing in real estate, there's different price thresholds that I think people really feel as reasonable. And sometimes I'll get people contact me and their budget is say 400,000 or 500,000, and it's really tough to find properties in Toronto proper and even in the surrounding GTA area at that purchase price. So I wanted to get into a topic, co-ops and co-ownerships versus condominiums. Co-ops and co-ownerships are really great products. They offer really good space, generally premium neighborhoods around Toronto, but people are just not informed as to what they actually are. So I wanted to talk a little bit about what's required and what it means to buy a co-op or a co-ownership. And essentially what it is you're buying shares in a corporation versus in a condominium, you're buying real property. So the banks view this ownership definition differently. That's why the buyer pool can be limited sometimes, because not all lenders provide mortgages on these properties. In fact, each building has its own list of approved lenders, and generally speaking, they're coming through credit unions. So Duca is a well-known credit union that covers a lot of them, but then each property has some of their own, whether it be North Birch or the Italian Credit Union. There's some of the other ones that do provide financing on these kinds of properties. And the other conversation ends up being people assume with co-op ownership that you need 30% down minimum. And I'm just here to say that's not necessarily true. It is true in some, but there's a lot of buildings that don't require that amount. And I would say, in fact, most buildings don't. I'm seeing mostly around 20%. There's even some buildings that will let you put down as little as 10%. So that all depends on how you qualify for the mortgage on each of those properties. But now if we look at the way condominium prices have risen, you might be able to buy a condominium with only 10% down. But if that, 10% is based on, let's say, anywhere between $700,000 and $800,000, that's between $70,000 and $80,000. Well, even, there are co-ops available in sizable ones at around the $400,000 mark. So if you're purchasing at $400,000 and you require a 20% down payment, well, that's $80,000. That's quite comparable now, and your purchase price is significantly lower. And the beauty of a lot of these co-ops is that they have a lot of character and charm. They're nice properties. If you're looking for something that feels more like a home, co-op or co-ownership could be a great opportunity for you. And looking into it further, when you look at the financing, the spread on the interest rate on a co-op or co-ownership used to be much higher. What I'm seeing now is there's mortgage products out there now, fixed rates between 3 and 5 year terms at 3.5 to 3.75%, and that's a standard posted rate. So they might be slightly higher than what a conventional mortgage would be, but it's certainly a lot more competitive than it used to be. So I think this is something that more people are going to have to look at. They also carry for a lot less than rent in a lot of cases. You rent a one-bedroom apartment in a premium neighborhood, probably a lot smaller than most of these co-ops. You're looking at anywhere between $2,200 and say $2,400 a month if we're talking central Toronto. You can buy one of these properties at about $400,000, and I think it'll carry for less than that rent. And the other beauty is a lot of times the property taxes and all your utilities, with the exception of hydro, depending on building again, is that your maintenance fees are all inclusive. So it's a nice, simple way to budget and make one fixed payment to your property management company. And they're pretty simple properties. So again, there's great opportunities for people to consider a product like this. And if you don't want to be in the rental market, as competitive as the rental market can be, co-ops are a little bit less competitive. And in the transaction I recently did at 648 Bathurst Street, the one that was featured in the Toronto Star, that property, we ended up with 2 offers. So it's not like, again, being out in the conventional condominium world where maybe you're getting 8, 10, 15 offers. And having to pay $200,000 or $150,000 over the asking price and really feeling vulnerable that you're overpaying for something. These are pretty simple properties. Again, the buyer pool is smaller, so you don't expect them to grow at the same rate as a conventional condominium. But for some people, that's okay. It's just more important about providing good quality housing in a great location. If you have any questions about these types of properties and you'd like to have a conversation, please reach out and let me know. I'd love to talk to you. Have a great day.